Students and working accountants, welcome to my Expert Tally Prime YouTube channel. Today, in this video, we are going to discuss about the GST, that is the introduction of different things relating to the GST. So in the first part, we completed some of the item topics, some of the information, and today we will take up the balance information relating to the introduction of GST. And after that, we will go to the tally frame, how to implement this GST. Okay. So we'll go to the second part of the introduction of GST. Before entering into the subject, an advice to you, a request actually. So many people, they are watching the videos and going off without subscribing. Please, everyone visiting the channel, viewing the videos, please subscribe to the channel and click the bell icon next to the subscribe button and select all so that you will get notification for all the videos which I upload in my channel. And the most important thing is, please everyone watch every video till the end. Don't skip in the middle. If you skip in the middle, you will understand up to that point. And the second part, that is the balance part of the topic, you cannot understand. So if watching the video, only half of the video, it is a waste. So in the colleges, we are going, attending the colleges or in going to the institutes. So we will attend the class for 1 hour. That is for this class. And some other subjects totally 3-4 hours we will attend the college. But for this subject also, you will attend the class for 1 hour. Here, the video will be less than an hour. Less than an hour. So please spend the time. If you want to learn well, spend the time or watch the full video, and then after watching that, if the video is good, if you feel it is good, you please like the video. If you like the video, the YouTube people will recommend this video to many people so that many people can learn this topic. Okay. Now, entering into the subject, so I will share the screen. Yesterday in the last class, so we have discussed about all the GST, everything, and the regular, I mean, what you call as, what you say, GST, then the GST introduced, registration schemes, types of dealers, and all this. And then after the types of dealers, that is regular and registered and unregistered. In the registered, there are two. One is regular scheme, regular dealers, and the composition scheme, composition dealers. All this we learned. The common portal is, that is everything, every work relating to the GST is to be done in this site, in this website called a common portal, gst.gov.in. Okay. And then for the registration, what are the visual limit and all these things. And then we learned after registration, the registration department will give you a GST registration number called GST identification number, called as simply GST, means GST identification number. Okay, so it will have 15 digits. I explained about that. Particularly, you just discuss about this Z, default digit Z. What is the meaning and what is the use? Many people, nearly 90% of the people don't know. The previous one is, the digit is the number of registrations in India, all India basis, on the basis of this PAN card. So up to 9, okay, this is a single digit, you can 1, 2, 3, 4, up to 9. Suppose if the number of registrations cross 9, that is 10 or more, in such a case, the what you call this entity code will be 2 digits. What about that second digit? It will be 2 digits. The total length will be 16 digits. But crack is only 15 digits. So that is why for the second, that is in India, so the up to 37 the registration codes are there. So in India, it is 37 codes. So maximum the entry code will be 37. If there are some other states divided, so another number will be allotted. So there are only 2 digits, 37 and 2. So the second digit is will replace this Z. So Z will disappear. The second digit will be there. So if it is 12, so there will be 1 to 12 and Z will not be there. That is the use of Z. This is called as default digit to replace the second digit in the entity code. Number of registrations to replace the second digit is Z is used. So no, I think 95%, 99%, they don't know. Simply they say default digit. Okay. And then now we will go to the other one. So in this case, after registration, every person supplying or selling goods or services have to charge the GST on the goods and services, and have to collect it from the from the buyer. So the buyer will pay the tax. So seller will collect the GST and the buyer will pay the GST. For that purpose, what is the rate of the GST in India? So in India, slab rates of GST there are 5 slab rates. That is 0%, 5%, 12%, 18%, 28%. These are the five what we call 5 slabs. So first one is 0%, means it is the goods are taxes to be levied, but rate is 0. Okay, so this is very, very, very most essential commodities like food items, some food items like bread, milk, pure vegetable, fresh vegetables, and all these things come under this percent. This is called as nil rated. So this is 0, nil. So this is called as nil rated, and 5%. So it is also necessities, but not very, very, very necessary. That is called as necessities of life, that is essential also. So the sum of the essentials, the most essential, no tax, that is 0, nil rated. And some essential, they are categorized into 5% tax relief, 12% and 18% commonly used by all the people. These are depending on the demand. So 12% and 18% of the goods. That goods will be divided with GST will be charged at these 2 rates. And 28% is charged on most what you call luxuries. So luxurious goods, luxury items. So they charge highest rate. So luxury items 28%. Okay. So here the goods are all these are the taxable rates. They are the slab rates. If the tax is levied with all these 4 rates, so tax is levied, they are called as taxable goods. This is also taxable goods, 0%, but tax is taxable goods, but rate is 0. Here, different rates, that's why tax is charged on the bill. That's why they are called as taxable goods. And this nil rated is also taxable, but the rate is 0. So this is called nil rated. Nil rated. And there is another thing also, that is goods. So these are taxable and others non-taxable goods. First one is nil rated, that is 0. And then exempted. Exempted means they are not taxable at all. There is no tax levied in this. These exempted list of the goods which are exempted, they are disclosed, they are entered in the act itself. So they are always exempted, no tax is calculated. So that is also the percentage will be 0. So nil rated also 0, exempted also 0. What is the difference? So nil rated means they are also taxable, but the rate is 0. See, some computer 18%. So that computer is taxable, rate is 18%. Some other items, for example, milk, some milk, not milk, some very essential items, they are not taxed at all, 0%. 0%. So it is called as nil rated. So they are taxable, but at present the rate is 0. So by notification by the government, the nil rated goods, nil rated items can be changed to some slab. So on the nil rated items, by giving notification, the rate can be changed from 0 to 5% they can change. This is called nil rated. Yeah, taxable, but at present rate is 0. Exempted means they are not taxable at all. They are not taxable at all. By notification also, the government cannot impose GST on these items. They are always exempted. If you want to impose tax on those items, any of those items, then the amendment has to be made in the parliament, the GST Act, and the exempted item should be transferred from the exempted list to the taxable list. Then only the tax can be charged. Otherwise, it's always exempted, no tax. So rate will be 0. But in this case, they are taxable, but at present the rate is 0. By just a notification by the government, the mill-rated item can be changed to any of the list, any of the slab. So 5% slab can be imposed, or 12% can be imposed on these items. So at present, it is 0. That is the difference between nil rated and exempted. And another one is zero rated. Zero rated is also 0, but we call it as this one as nil rated, completely exempted. Zero rated means when you are importing the goods, that's just like purchasing from other states. So purchasing from other countries, in that case, we have to pay GST. We have to pay GST. But when you are not importing, exporting. So when you are exporting, it is just like exporting, selling to other states, we have to pay GST when you are exporting the goods. And when you are paying the GST, when you pay the GST to encourage the exports, what the government will do, whatever GST is paid, that will be refunded to us. That will be paid back. That will be refunded. So instead of paying and getting the refund, there is one scheme called as that is called as declaration. That is the declaration is to be the bond or LUT. Sorry, LUT. LUT means letter of undertaking. Letter of undertaking. That's also called bond. So the letter of undertaking and bond should be secured from the department, apply to the department, and you have to get letter of undertaking or bond. If it is submitted, tax is not payable. Tax is not payable. Need not pay the tax. Need not get back the pay. No refund. That's why that is called for exports payment without payment of tax. If we send the exports, that is called as zero rated. Zero rated. So bill rated, exempted, all are zero rated. All are zero rated. But this is taxable, but the present rate is 0. Exempt is always exempt. This bill rated can be converted into some slab can be imposed on that just by giving the notification. Exempted cannot be taxed. So only Parliament can amend the act. And zero rated means it is related to export. When you are exporting without payment, they are called as zero rated. So zero rated means export. Exempted means always expected. Nil rated means they are taxable, but now the rate is taxable. 12% they are paying. Similarly, taxable 5%. Here also taxable, but 0%. And 0 rate is exports. Non-GST goods means these goods does not come under the GST. They are not covered by the GST. That is why they are called as non-GST goods. No, they are not covered by GST. No GST is taxed. Okay. So for these goods, some other tax, VAT will be old one is there. So only for this non-GST good, they does not come under GST. So VAT is payable. VAT is collected on the non-GST goods. Two types of goods. One is liquor for human consumption. Liquor for human consumption. And the other one is petroleum products like diesel and petrol. On these two, they are not covered by the GST. So you can give me back. Well, then this can be brought under the GST Act by notification. So when the notification is given by the government, central government, they will come under the GST, but it will not happen. So from 17, so far, nothing happened because this VAT is collected by the state governments. So on the petrol and on the liquor, lot of income the state governments are getting. That is why the state governments are not agreeing to make it to bring it under the GST Act, because all the finance ministers, That is why they are called as non-GST goods. So we will enter in the GST, tally also will enter, but it is non-GST goods. So GST has not charged, but on these non-GST goods, we charge VAT. VAT also like GST payment, receipt, everything. When you sell, we will collect. When you purchase, we will pay. Same thing. So this is called as the slab rates and the type of goods. Type of goods means taxable. That is, tax is levied on in these slabs. Taxable, 0% nil rated, exempted, 0 rated, non-GST goods. These are the types of goods. Okay, and now on the GST portal, we will do all this work, and for all the matters relating to the GST, any amendments or any changes, anything to be done will be determined by the GST Council. That is, to administer the GST, to make any recommendations, to make the alteration or anything, amendments or any increase in the rates or anything, any decision to be taken by the government should be covered by this one called as GST Council. GST Council will meet and they will take the decisions and they will recommend to the government. On the recommendation of the GST Council, the government will issue the notifications or circulars and implement the decisions. So the GST Council is chaired by the Finance Minister of India. That is, Central Finance Minister is the chairman, Deputy Finance Minister, Minister of State. So he will be a member. So Finance Minister is the chairman and Deputy Finance Minister is a member, and the finance ministers of all the states and union territories, all the states and union territories, finance ministers are the members. So this is the composition of the GST Council, and they will meet once in every month or once in 2 months like that. Until now, already 43 meetings over. So like that, they will meet and they will discuss different things and they will make a recommendation to the Government of India Finance Department. And on the recommendation of this GST Council, they will take the decisions and they will make amendments in the Act, or they will do the circulars and the notifications, and they will implement the decisions, making the changes in the rates as well as anything, changing the forms as well as in the composition of the forms and whatever it may be related to the forms and everything in the GST portal, and everything will be decided by GST Council. Okay, the GST Council. And then, okay, so this tax is implemented means, so one person will collect the tax and pay to the government. Who will collect? Only the seller will collect the tax on the goods or services from the buyer. Buyer will pay. And the seller collecting from the buyer, he will pay to the government in the name of the buyer. That is, name is not more important. Every buyer will have this number. It's called as, what is this? This is GST number, GST. So with this GST number of this buyer, so on behalf of the buyer, the seller collecting will pay to the government. So this is how the tax will be. Okay. This is how the tax is administered. Okay. So the supplier will collect the tax on the sales from the buyer and pay to the government on behalf of the buyer. Okay. Now, in this case, I told you. So in this case, the goods are, there are different types of goods. That is taxable goods. That is, tax is levied. That is in these 4 slabs. Tax is levied. They are called as taxable goods, nil rated, exempted, 0 rated, non-GST goods. On all these, there is no tax at all. Okay. So the taxable goods, non-taxable goods in different rates. Taxable goods, one only. Non-taxable means nil rated, exempted, 0 rated, non-GST goods also. Okay. So these goods, when the seller is issuing the bill or invoice or bill, it is called as in 2 different names. So when the tax is charged, that is, when the goods are taxable, tax will be levied. So if the In the invoice, goods are taxable and the tax is levied. The name of the invoice is called as tax invoice because there is tax in the invoice. If the tax is levied, then the invoice is called as tax invoice. So for taxable goods, they have to issue, the seller has to issue tax invoice. For others, non-taxable goods, nil-rated, exempted, zero-rated, non-GST goods, no tax is levied. In such case, the seller, he will issue the invoice not in the name of tax invoice. It is not invoice, tax invoice, or invoice it is not called. It is called as bill of supply only. We are supplying the goods. So just mentioning the value of the goods, that's all, no tax. So that's why it is called as the bill showing the supply of goods. So tax invoice and bill of supply. So for taxable goods, taxable goods, and that means if there is tax invoice is issued. If there is no tax, bill of supply is issued. This is about the administration. Okay. Now the most important is how to implement this. For implementing this GST, for using the GST in the tally, in accounting system, tally or any other accounting system. In the accounting system, we have to learn something about tally. So I told you, the seller will collect the tax in the invoice and the buyer will pay the tax to the seller. Seller will pay to the government, isn't it? So what they are called as is. So the seller is called as, we call seller, except technical term is, seller is called as supplier. So in the GST Act, seller is called as, we call seller, but he is called as supplier. Means seller means goods they are selling. That means giving the goods. That's why he is called as supplier. Supplier of goods or services. So supplier of goods or services is the seller, is called as supplier of goods or services, and the buyer, he will get the goods, receiving the goods or services. So the buyer is called as recipient of goods or services. Recipient. So supplier means seller. Recipient means buyer. In other way, seller is called as supplier, buyer is called as recipient. So supplier will sell the goods, buyer will receive the goods. So supplier, the seller supplier will collect the tax in the bill, in the good for the goods or services. The recipient who is buying the goods, he will pay the goods if the goods are taxable. The goods are not taxable. Simply you will supply the goods, you will receive the goods, there will be no tax. Okay, so this is about this. And then the supplier or the recipient is another business organization or individual. Another business organization or individual. Another bill of another person is there. And then I told you already, when a person registers his business, he takes registration under the GST, he is called as registered person. There are two types of registered persons, regular and composition. Okay, and then the sale or purchase of goods, the sale or purchase of goods is also called supply. Supply of the goods or services. Supply means giving one person giving the goods or services to another person. One person is giving, another person is receiving. So this process is called as supply. Supply means sale or purchase. Supply of goods or services. Supply of goods or services. And these supplies are also called as, see here, when you sell the goods, the person is called supplier. And the supply of the goods means or services, when you purchase the supply of the goods or when you sell the goods or services. So when you sell, the goods will go, goods or services, they are called as outward supply. The giving goods or services to one person to another person is called a supply. When a person is selling the goods will go out, it is called as outward supply or simply the output also. Outward supply or output. And we are purchasing the goods are coming to us, then it's called as goods are coming in, that is called as inward supply. Inward supply, it is also called input. It is also called input means inward supply means purchase. Output means outward supply, going out. It is also called sale of goods. Okay, and depending on the The supply, outward supply or import supply, outward supply or inward supply, whatever it may be, outward supply or inward supply. One person is selling outward supply, another person is purchasing inward supply. So depending on the place of supply, that is outward supply as well as inward supply. So outward supply means selling, seller will sell the goods. Inward supply means purchase. So purchase means the buyer will supply. So depending on the place of the supply, that is who is supply, where it is supplied, that is where the outward supply, in which state, and inward supply in which state. That is, if the supply of both, that is outward or input, that is seller or buyer, the sale or purchase are in the same state, is called as intrastate supply. Supply supplying in the same state. Supply means selling or purchasing. So supply in the same state, that means sale is in the same state and buyer is also in the same state. Both are in the same state. It is called as the supply is in the same state. One person is supplying outward supply, another person is receiving inward supply. Both, that means buyer and seller, that is the supplier and the recipient, both are in the same state. It is called as home state also, or it is called simply intrastate supply. Intrastate supply. So X is in AP, Y is in AP. So both are in AP. So it is called as for X supplier, seller, and buyer is P. So both are in AP. It is called as intrastate supply. Supply of goods or services or home state supply. It is called. And if the goods are supplied from one state to another state, that is the business in between two states. That is the supplier is in one state, the buyer is the supplier or the seller is in one state, the buyer or the recipient is in another state. Then it is called as interstate supply. That is outside interstate supply. So the supply is divided into two. That is, one is intrastate supply. That means the supplier and the buyer, that is seller and the buyer, the supplier and recipient, both are in the same state. It is, that is outward supply and inward supply. Both are in the same state. It is called intrastate supply or home supply. If the supplier and recipient or the seller or the buyer or the inward supply and outward supply, both are in different states. They are in different states. It is called as interstate supply, that is outside state. So this is the nature of the supply. Depending on the nature of the supply, we call them interstate or intrastate. Interstate means in between two states. So two different states. Intrastate means in the same state. This is the thing. And then here, these are all the bill of supply, everything. And then, so the tax is collected on this, isn't it? Then the tax, GST, so it is not collected just simply as GST. So GST is eventually is, I told you, it is whatever dual system. The state government and the central government both will collect a GST. That is why in the GST there are three components. These two are separate. There are three components. That is, one is IGST, is integrated goods and services tax, IGST. Another one is CGST, central goods and services tax, central tax, GST is also one. So CGST. SGST means SGST, sales goods and services tax. SGST, there are some union territories in India like Daman Dayu, Dadra, Nagar Haveli, Chandigarh, like that. So in the case of union territories under the central rule, then in that case that is not a state. So it is called as union territory. Then there is an assembly, it is called as state. When there is no assembly ruled by the central, then it is called as union territory. For a union territory also, there is separate tax. It is called union territory GST. So only one of these will be there. If it is a state, SGST. If it is a union territory, UTGST. So in these two, only one will be there. So IGST, CGST, SGST, or UTGST. So these three types are there. Now, when they are called like this, means when the goods are supplied, the supply is intrastate. That is, the supply of goods is within the state. The buyer and the seller both are within the state. within the same state, then the GST, whatever it may be, 10%, 20%, whatever it may be. I told you here, 12% or 18%, whatever it may be. The tax will be shared by the central and state, 50% and 50%. Central will take 50%, state will take 50%. Suppose if it is 12%, central 6%, and state 6%, they will share. With 18%, 9%, 9%, like the 50-50. Both central and state share the tax. In such a case, these two taxes are levied because 50% is paid to central, 50% is paid to state. That is why if the supply is within the state, then his total rate, slab rate will be divided into two. One is CGST, other is FGST or UTGST. What is it? Union Territory, UTGST, UPTST, SGST. So CGST and SGST, 50%, 50%, both will share in the rate. Okay, and if the supply is interstate, that is from one state to another state, the buyer is in one state, seller is in another state. In such a case, it is called interstate supply. In the case of interstate supply, total tax, total slab rate, total tax will be collected by the central government, and later it will share with the states. Okay, so actually the state in which the goods are consumed are destination based. So on the basis of that, it will share with the particular state. It is called as IGST, means integrated goods and taxes. Service tax means both central CGST and the HST both are combined. That is, both are integrated. That is why it is called as IGST. So from Andhra Pradesh to Telangana, Telangana to Delhi, Uttar Pradesh to Madhya Pradesh, like that, if the supply is made, then total 18% or 28% total tax will be collected by the central, where in the name of IGST. So in the same state, Telangana, purchase same. That is seller and buyer also. Both are in Telangana, both are in Andhra Pradesh, both are in Tamil Nadu or Karnataka, both are there. Then it is called as intrastate. Then central CGST 50%, central state HGST 50%. In this, they will share. We have to collect both the taxes. I mean, 50% two taxes will be collected. So these three are called as actually four, but both three, these two are same. Either this or that. So these are called as components of GST. So total will not charge it as GST. In the GST, depending on the supply, we collect on the sales, we collect CGST and HGST, or CGST, UTGST. In one case, in another case, we collect IGST total 18%. In this case, 9%, 9%. Like that, we will collect. So this is about the taxes. This is to be implemented in tariff type. And one more thing we will learn here. Here, one more thing is, so here, every person registered under the GST. That means registered dealer, unregistered dealer, not registered. So no GST is applicable to him. Leave it off. Only the registered person called as registered dealer. These registered dealers are two types: regular and composite. For regular and composite, whatever minimum limit is there, they have to get registration. When they are registering, they can opt for both any one. Regular means there is no maximum limit for the business. Composite means there is a limit for up 1.5 crore composite. So both are registered only. Both will get the GST number. So in the case of, in these two cases, they are registered. They have to pay tax to the government. For payment of tax, they have to submit a statement to the government regarding the business. Business means, first of all, sales they have to intimate, and then sales and purchases, what is the liability and what is the thing. When you are purchasing the goods, we will pay tax. That means the buyer will pay the tax, seller will collect it and pay to the government. This is the out, what you call this goods for sold means goods are going out, output. On the output we collect tax. It is called output tax. We have to pay to the government. And when you are purchasing, we will pay to, that we are called as input. Purchase means inward supply. Input is called For input, we pay the tax. It is called input tax. So input tax and output tax. So output tax is collected and paid to government, and input tax is paid already. So when you are paying this, output tax is collected and paying to the government. The input tax we already paid on the goods. So input tax will be adjusted against the output tax, and the balance only will be paid. So the adjustment is called set off. The out input tax which we paid already, that you have to get back. That is adjusted to getting back. You will not get cash. You will get back means you will get an it will be adjusted to the liability which you have to pay. So it's called as input tax. So that is to be adjusted. It is called, we get it back just like getting back. It is called as input tax credit, ITC. Okay, ITC. And then in this case, regular people, they have to submit the statement is called as the statements related to the business is called as they're called as returns. Return of the supply, the return of the business. So return they have to file every month on the GST portal. So in this case, regular person, composition person, it is meant for small business people. That is why these composition people will file the business document. It is the return. They will file the return only once in 3 months. And when they are paying the selling the goods, they cannot collect, that will be given later. They cannot collect any tax. They cannot collect any tax. They will not pay to the government. That's why they cannot collect and pay to the government. They have to pay on the turnover of sales from their own pocket, very small amount, irrespective of the goods, 12%, 5%, 18%, 20%, whatever the rate may be, they will cannot collect from the buyer from the on the basis of the turnover or sales from their pocket. They have to pay small percentage. 1% they have paid to the government only once in 3 months. This is about the composition bill. In the case of regular, they have to file the return every month. So in this case, regular is only one they're filing, and these regular dealers, they have to file 2 returns every month. One is the return related to the sales that is called as GST return. GSTR1, that is the return of supply, outward supply. That means sales. So in that return, we have to intimate, we have to put all the sales. So the GSTR1 is called, liability statement also. Whatever we sold, we have to pay to the government. So we have to intimate the sales, so that we have to intimate the liability. That is GSTR1. And the second one is GSTR3B. 3B, it contains the liability. So we mentioned we filed in GSTR1. In that we have to show that showing the liability. That liability will be shown in that also. So the liability, and so when you are purchasing the goods, we already paid the tax called input tax. So whatever input tax we got, we will not file. So automatically it will generate. So what is the input tax we have to get, and so output tax and input tax, what is the total input tax available, and in that input tax credit, ITC, we will adjust what is the, we will show the adjustment, that is called as set off, adjustment of the ITC to the liability. We have to show both. So what is the sales liability and what is the ITC, we have to get back. Those in 3B will show both, and what is the net amount payable, or if the ITC is more, our liability is less, we need not pay anything. So paying nothing or paying the difference, that will be, we will do that, and the amount will be paid in the GST. That is called, it is called a statement of payment. First one is statement of liability. This is statement of payment. GSTR1 return, GSTR3B, both we have to file on different dates. Okay, so the regular what you call the regular taxpayers. The regular taxpayers are the regular dealers. They have this composition I told you that we learned it, give it up every 3 months. These regular dealers, every month they have to pay, they have to file and pay the taxes. Every month they have to file the return, GSTR1 and GSTR3B. So here also one more thing is, in the case of this regular taxpayers, they are called taxpayers also. We call them as dealers. Regular dealers, in the case of regular dealers, so they have to file the documents, file the returns every month. But depending on their annual turnover, depending on their annual turnover, they can also file every month. One and TB, they can file every month. Or if they want, they can file every quarter also. Not every month, every quarter, GST-1 and GST-2, they can file every quarter depending on the depending on their turnover. Okay, this regular dealer, I mean, filing the returns every month, they are called as monthly filer, or simply they are called as regular. Monthly filers are also called as regular. So in the regular dealers, the monthly filers, they are also called regular. So they are regular dealers means monthly filers. Monthly filers. If the persons filing the returns quarterly, they are called as quarterly filers. Monthly filers, quarterly filers. So monthly filers are called as regular dealers. Quarterly filers are called as QRMP dealers. That I will tell you. So in this case, so every month they will pay regular dealers. They will pay the tax also. They will file the returns. In the case of this quarterly filers, they have to file the quarters every month, but the government will not keep it. So for regular people, regular dealers, they are paying every month taxes. But monthly, quarterly means, so they are filing quarterly means the government will not wait for 3 months for the payment. So they have to pay taxes, GST, they have to pay every month. They can file the returns quarterly only. They can file the returns quarterly, but payment they have to make every month depending on their business. They have to pay. It is a very best scheme. Regular dealers, filing the returns every month is the best scheme. This is a very bad double work we have to do. That we will learn later. So they are called as quarterly filers. They are also called as QRMP, means quarterly return. Return quarterly we are filing, but monthly payment is there. So QRMP means quarterly return, monthly payment. So monthly you have to pay the tax, but you can pay the returns quarterly. Instead of that, filing the returns quarterly every month and payment every month is very easy, very simple also. But that's called as. But why? Who can file regularly? I mean monthly, or who can go for the quarterly QRMP scheme? Means depending on the turnover. If the turnover is not more than 5 crores, up to 5 crores, they can go for any one scheme only you have to go. So they can either opt for the regular, that is they can file monthly, they can be a regular dealer, or they can opt for QRMP scheme, that is every quarter they can make the payment and they can file and make the payment every month, quarterly payment. So the QRMP scheme, they can opt for QRMP scheme or they can go for regular scheme also if the turnover is not more than 5 crores. If the turnover is more than 5 crores, there is no quarterly QRMP scheme will not be applicable. So QRMP is applicable only up to 5 crores. If it is turnover is above 5 crores, QRMP is not applicable. Only regular means monthly filing only they have to make. So up to 5 crores, monthly regular, monthly means regular, or quarterly QRMP. Okay, but above 5 crores, there is no QRMP, only monthly filing. That means regular scheme only they have to take. This is called as CDR. The returns and payment depending on the returns and payment monthly or quarterly. Payment, returns and payment monthly, returns quarterly, but payment monthly. It's called as this is regular, this is QRMP. Okay, so this is the about this one. So slowly we will implement one by one. First of all, what we do, how to implement this GST and how to make the entries. That is, the seller will charge the GST in his invoice. So the seller will charge, the buyer will pay. So both will record. He will charge the GST, he will collect the GST, he will record. The other person, buyer, he is paying the GST, he will also record. How these people will record how to, but one thing you do, when you are making these entries, all these taxes, any tax, GST or income tax, any tax is to be calculated automatically. We should not enter the tax manually. There's any mistakes. You should not enter. If you entered, it is to be calculated automatically. For that, how to implement that one means that is the implementation. How to, enable the features, how to set the GST details, how to set the GST rates, and all these things, so that the tax will be automatically calculated. So in the next video, we will go to the GS tally price, and this tally price, how this is to be implemented. Okay. So with this, I close the topic today. That tomorrow we will go to the tally price implementation of the GST means how the GST is shown and calculated in the books means in the sales and purchases. Okay. Sales, seller will make it. Purchaser will make it by with the help of the sales invoice. The seller will give the invoice. So seller will make his invoice and buyer will get the sales invoice from the seller, and by seeing that invoice, they will make the entries. But that also, you should not calculate the tax. It is to be calculated automatically. This is about the GST, everything about the introduction, then implement it. Without knowing the introduction, we cannot implement directly. So next video, we implement the GST in the books, that is in tally. Okay. With this, I close this topic. And please watch the video till the end. Don't forget, and we will meet in the next video. All the best. If you cannot understand, you watch this video any number of times. If you have any doubts, you can watch any number of times. Okay. And you have to practice. From next tomorrow, what are the entries we will do? Actually, we made all the entries, purchases, sales, returns, everything already we know without without tax we know. Now the thing is the same entries we will make, but we have to enter the GST also. For entering on the automatic calculation, we have to make some settings. That's what we have to make, so that the tax will be automatically calculated. That is the topic in the next video. So with that, bye. All the best. Bye. And